Think about how much you spend on your kids every month. What if your dividends can replace that income you spend on your kids? REITs were created in the 60s so that the everyday person could build passive income utilizing real estate. But if we can work for 5 years, 10 years, 20 years of our life, you can invest for 5 years, 10 years, and 20 years to put yourself in a position where you never have to work again. And that is possible when you start to invest in things like REITs.
It has to work or it has to work.
Welcome back to Circle of Greatness. I'm your host, Nehemiah Davis, and we gotta bring back a favorite. I'm talking about, this is by far top 3 best episodes we ever recorded, right? By numbers don't lie. Highest viewed episode. And it's all around financial literacy. It's all around REITs. I have to bring back Miss Ashley Fox to come break down more ways that we can make money and build wealth for our families. Ash, what's up?
How are you? I'm doing well.
Hey, thank you for coming back. I'm excited. How's everything been with you?
Learning and growing every day.
Yeah.
Every day.
I've been seeing more and more people getting dividends,
Yes.
more and more people getting stocks, opening up accounts.
Yes, we did our first cash flow creation virtual summit.
Okay.
Had over 1,000 people
Wow.
walking out, building passive income,
Wow.
brick by brick, share by share. So
Yeah.
yes, we're doing it.
Yeah. What's so crazy is like you have a fresh view and perspective on showing people how to get into real estate through REITs, as well as just showing people how to invest their money. It's just something we haven't been learning like for years and years and years. And now it's like, I feel like it's starting to become more accessible. So, I mean, the biggest thing that I think right now is like, we haven't been told how to invest, right? So one of the things I want you to do today, look at my account, because I've just such and such say invest, do this. I'm just buying stuff, and now some of these things is red, right? You former Wall Street analyst, you understand it, but the reason why I love how you're doing it, because you're showing people how to get into real estate as little as a few $100s, as well as you're showing people how to just build wealth through the stock market, which I think is so important. So before we get in my account, like, why in this season do you think it's so important for us to begin to understand how to make our money work?
So I think the first thing is never buy what somebody just tells you to buy, because everybody's different, right? So I know individuals that buy direct real estate and they make good money, right? So it's not to say that this is the best way to invest, but when you feel like I don't have credit, I don't have enough money, I don't have the time, saying no to building wealth is not an option. So REITs, real estate investment trusts, allow you to have options. Yeah. Even when it comes to stocks, right? Like I run my company, Amplify. Not everybody wants to run a business or can run a business, but it doesn't mean you can't make money as a result of somebody else's business. So you can start investing in the stock market. And I think it's the easiest way to do it because a lot of people don't have a lot of money. A lot of people are scared. Therefore, you shouldn't be starting with a lot of money. So when it comes to investing, it's a standard, not an option. If you can't spend or work your way to wealth, you can't save your way there. And we're great at spending. And
100%.
Some of us are okay at saving. We're phenomenal at our work ethic, but there's another layer to building wealth where your money has a job and it's working for you. And so I think now is the perfect time. Well, the perfect time was yesterday, but now is the perfect time because we are coming out of a recession, right? Like the Federal Reserve just announced that they're going to start to lower interest rates, which means you're going to see the interest rates on your savings account decline. You're going to see the interest rates on your debt decline. So when we think about real estate as a whole, that industry as a whole has been taking a hit because interest rates have gone up. So the cost of debt to take out loans, to buy properties, to build properties, that industry is taking a hit. Now, is it going to be like that forever? No, but you have to recognize that in this moment, you can get in at a lower price point. So when we talk about REITs, a lot of REIT prices, they're down right now. Yeah. And again, it makes sense. Is it your fault? So when you mentioned like some of your investments are red, I mean, it's business. Like we were in an economy that was taking a hit. So that means what you've invested in could take a hit now. Is it like that forever? Absolutely not. But if you have the time span, so you got to ask yourself when you start to buy or someone makes a recommendation, what is your intention when you're buying it? I know when I buy REITs, I'm not trying to flip my money. It's not that type of investment. I want to hold, I want to build, and I want to collect. The same way a real estate investor who wants to build their portfolio and have a bunch of tenants to build passive income. You got to buy your first property. You got to buy your second property, but you're not buying it, flipping it because now you don't have the income. So you have to ask yourself, am I looking to flip Because if that's the case, you might want to be a trader. You might want to have short-term investments that you want to make. Me personally, I buy and I hold. I don't have time to trade, but I also like passive income. So when you look at your portfolio, you have those stocks, those investments that don't pay dividends. Now, those are the companies where they're taking all their money, they're putting it back into the business. Where dividend paying investments, things like REITs, dividend stocks, they're making money, they're making a profit, but a portion of that profit goes to all their shareholders. Your job is to say, how much of that money, how much of that profit that they're willing to give me, how much of that do I want? And you determine that by the number of shares you have. Same thing with real estate. How much tenant income do you want? That's dictated by how many properties you buy. Same thing with REITs. You can start and buy a REIT. I own a REIT that's like $10 and I'm getting 15, 16% every year, but I'm not doing the work. Now you could do the same thing and buy a property. Only thing is you might have to borrow money from the bank. You might have to dedicate some time. You might have to manage tenants and fix, you got to do a lot of work and that's okay. But for the individual who doesn't have a lot, who does have fear, who wants to build over time, because this is you're not going to get rich quick. But if we can work for 5 years, 10 years, 20 years of our life, you can invest for 5 years, 10 years, and 20 years to put yourself in a position where you never have to work again. And that is possible when you start to invest in things like REITs.
Yo, if you're looking at this episode, stop what you're doing right now. Go to mycashflowcreation.com right now, because if what Ashley just said sound good, and I'm talking about in the last 1 minute breaking down whether you want REITs, whether you want growth stocks, she's hosting a 5-day virtual conference where she's literally going to break everything down. Like, you're going to leave there with REITs. You're going to leave there with an open up brokerage account. You're going to leave there understanding how to build wealth for your family. Like, again, you're going to get a lot in this episode, but you're going to get so much more over this virtual conference. So make sure to go to the website or also click the link in the description. So Ash, what I want you to do is, if you don't mind, your professional opinion, I want you to just take a look at my account. Maybe tell me some things that I could be doing right, some things I could be doing wrong. And then I want to get into real estate today without having to put down $1 million, $100,000. Like, you showing people how to do it with a few $100s, right? I got some thousands to invest, but I want to also look into some stocks or REITs that you recommend. So got my Schwab open. I'm going to pass it over to you.
Okay, so the first thing I see is you have a lot, which is okay. But you have to know exactly what every company is doing.
Right.
So I challenge you, every 90 days, these companies are reporting their financials. You have to make sure that they're making money, that the reason why you bought them in the first place still exists. And you don't have a lot of dividend paying investments. You have a lot of really great companies. So I like to buy the biggest and the best companies, just because I feel like America needs companies like an Apple that you own. Amazon is the second largest employer in this country, right? America can't afford to let go of an Amazon. But you have some of the biggest and best players from a Microsoft, from a Google, right? So I think you have good companies, but I challenge you, if this was a football team and we're playing fantasy football, which player needs to get benched? Because when you think about what player is holding you back and has been consecutively holding you back quarter after quarter, you have to think, I like that player over there. I think I want to trade. Because you don't need a football team to win. Now, if we're strictly talking about passive income, you have a lot of growth stocks. So ask yourself,
how am I paid with these growth stocks? Because I know you say dividends, I get paid quarterly or monthly.
Growth stocks is like you buying a property in an up and coming neighborhood. You want to buy it low, and then you want to sell it at a higher price. So it's possible some of the investments, so you got Apple's made you some money. Nvidia's been killing it. If you say, hey, I want to take some of these gains, you could sell some of these and capture the profit that you made. So that's how you make your money with your growth stocks. Now, your dividend stocks and your REITs, you hold them. Investors that want to retire, investors that want passive income, they're not trying to flip. They're not buying a property to sell it. They're buying a property in a nice neighborhood with a good tenant that can consistently and give them a reliable passive income. So now I got to ask you, what's your passive income going? How much do you want and why do you want it? So if you think about your children, right? You want to get to a space where it's like, okay, like I start thinking about my niece, and by the time she gets to college, she's 6 now. By the time she gets to college, I know when I was in college, the extra $1,000 to $2,000 might have made a difference, right? Or when I was in high school, right? I wanted to go to prom. I wanted to go on trips. I want to do different things. Think about how much you spend on your kids every month. What if your dividends can replace that income you spend on your kids? So start to really think about, what do I want to replace? And I challenge anybody that's watching, the first thing you want to think about, what is your smallest bill? How much do you pay Netflix every month? And those of you who don't have any passive income, And I think we get so caught up in we need thousands to invest. If you're not bringing in $10 a month, how about we start there? If you're not bringing in $100 a month, how about we start there? Because you're going to build over time. Yeah. So I challenge you to think about what bill is annoying you that it's like, what if I can get this company to pay for it? I like to think like I own stock in Verizon. Verizon pays like a 6-7% dividend. How many shares of Verizon do I need to own so that Verizon's dividend pays my Verizon bill? So put yourself in a position where you're listing out all your small bills and how can my dividends pay? And I think for you, because you do have children, what does the future of your child's life look like where their expenses are going to grow and they're going to come to you and ask for money?
That's good.
So really start to think about, hey, an extra what? At bare minimum, an extra what? What would you say?
On a monthly or annual basis?
Monthly, it doesn't matter.
I mean, if I could make an extra $5K a month passively.
Okay, which is $60,000 a year.
Yeah.
That means if you have $1 million portfolio with a dividend paying you 6. Now, when you buy REITs, you want to look anywhere between 4 to 17%.
Got it.
So
4
if you're
to 17, 4 being the lowest.
Correct.
I want to get to 17%.
But that comes with a little bit of risk. Those aren't the strongest and best REITs that exist. Now they got some REITs.
Is that what people call penny stocks?
No, so we're not paying the penny stock game. Not here, not here. No. But there, for example, if you take Prologis, Prologis is worth over $100 billion. Yeah. One of the largest REITs in the world, right? They're Amazon's landlord. So when Amazon has warehouses, they don't own all the warehouses. They pay rent to Prologis. Prologis pays their bills, takes a portion of the money they make, and then they pay you, the shareholder. And they've been doing that for years, right? So think
that's considered a risk?
So, I mean, at the end of the day, what is the risk around real estate? I mean, we talk about risk. Everything has a risk, but at the end of the day, Prologis owns over 5,000 properties.
Right.
They have properties all over the world. They're not new to this. So when you're buying a REIT, it's like you're investing in an expert. You're investing in a business partner that's been buying properties, managing properties, handling tenants, and has a history of paying out passive income consistently, not missing these payments to their shareholders. So now it's like, hey, Prologis, you do the heavy lifting. You do the property work. I got a business to run. I got kids to take care of. But I want a portion of the money you make. I don't want to have to manage that. They're not going to call me. I want a portion of the money that you make. So nonetheless, when you buy a REIT, that's how you got to think. Who is the most experienced? Who has the best tenants? Who has a good amount of properties? Because if the tenant's paying the rent, the check is coming in. So if you think about during a recession, there's a REIT called Vici, right? They less than $50 a share. They own a lot of Vegas properties, right? So the way I think, Super Bowl, you're talking about Mandalay Bay, the Luxor. You're talking about the Venetian. These places, when you go stay in Vegas, you're paying to stay there. Vici's collecting the rent. Vici pays out dividends to their shareholders. So again, and the other thing that a lot of people need to know, REITs by law have to pay you. So imagine having a business partner that now has a law that states 90% of their profits have to go to me because REITs don't pay corporate taxes. So in exchange for not paying corporate taxes, they have to give up 90% of their profits to you. Yeah. So the way I think is, while everybody's going to the Super Bowl, how much is Vici actually about to make in Q1 just from everybody saying that all these properties that Vici owns? So, but during a recession, during a pandemic, a lot of people weren't really traveling to Vegas. Airlines were suffering, like hotels were suffering. So they took a hit. But just recently, Vici just raised their dividend because now the economy is bouncing back. So you want to think about opportunities where real estate has been down, but who's strong, who can consistently provide me this income, who has a history of paying dividends and consistently giving me more every year. And that's important because, again, they charge you more with your rent every year. Yeah. And that's what happens with the tenants that they have. So when you think about it, having that $1 million portfolio. And those of you who don't have $1 million, what if you can get that in 10 years? If it takes you 10 years to create $1 million portfolio, to get $5,000 a month, which is 6% a year. Remember, I said 4 to 17. Right. There are REITs out there that pay a 10% dividend, which means you don't have to have $1 million portfolio to get to that. Yeah. But in this case, if you think 6%, that's a good rate, right? So now you're building up, you're buying enough shares that'll equal out to getting you the $5,000 a month, the $60,000 a year that you want. So if that's your goal, now it's a numbers game.
Is that a good goal, or it's kind of
it's up to you. And I challenge everybody watching, how can I replace my income? What the money that I make at my job, how many shares of a REIT or a dividend stock do I need to own to get to a space where I choose to work if I want to.
That's powerful.
And even if you get half of that, even if you get a quarter of that, there are people in this world that don't have $1,000 a month coming in, right? So we have to start, but in order to get $1,000 a month, you got to get your first $10. Yeah. You got to get your first $25.
Let me ask you this. So my savings account, right? This example, I got 10,000 savings account. That's everything I got to my name, 10 grand in savings account. I want to go put it in REITs, right? Am I able to put the whole 10,000 but get it back if I need it, or I gotta, if it's locked in, is it a thing where it get locked into a REIT where you can't, or can I sell it at any moment?
Great question. So what you're describing is like a real estate fund, which are available to people. The only difference is real estate funds usually have a minimum to start. REITs, I mean, most REITs are less than $200. You could buy a REIT for $20. Yeah. Now, REITs are liquid. So let's talk about, and liquid meaning you can easily sell it. You got a property. They're not liquid. It's going to take you some time to find a buyer or a seller. Real estate funds sometimes have lockup periods. So to answer your question, it's possible that if you are invested in a real estate fund, that they got to hold that money and put it to work for you so you can't take it out. Now, a REIT doesn't work like that. If you take that 10,000 and you invest it and you say, hey, two weeks from now, which again is not, again, remember, you're buying REITs to hold for it to grow over time to collect income. But let's just say you needed the money. You can sell your REITs. It's liquid. Now, will it always be 10,000? It might not be, because that 10,000 is equivalent to you buying a property. While the value of our homes and real estate isn't listed on the stock market and you can see it all day, every day, if you get your home appraised, I can't guarantee that your home is going to be the same value it was when you bought it. Got it. So the value of the price of the REIT can move. It moves all day, every day, because you trade it like a stock. It just doesn't move as fast as a stock.
So, and I'm only asking because it's like, well, if your money's sitting in a bank account is losing 10% annually due to inflation.
Okay, but let me stop you there. One, if you had 10,000 and that's what you got, don't put all your money in the market.
Got it.
And if you've never invested before, you're probably scared. Start with what you're comfortable with.
Right.
So maybe it's just 100. And but at the same, so the way I think, for me, my investments, my stocks, my REITs, those are my emergency fund, right? When I need some money, I'm not going to my savings account. I literally keep money in my savings account for short-term needs. So for example, payroll with my staff, right? That I keep that there, but I want my money making money for me. And the other thing
That's
too,
what I was asking.
Right?
Yeah.
But if you're just starting out, don't take all your money. Yeah. Now, is it possible that all 10,000 can be invested? Absolutely. But you got to get to a level of comfort and understanding that if my money's working for me, I got to let it rock. Yeah. And so that's the goal. So yes, you can, but if that's all you have, absolutely not. Do not take all your money and go buy REITs, but I challenge you not to keep all your money in a savings account, because no matter what they're giving you now, it's going to be lower as interest rates start to decline. And that's also why people don't retire off savings accounts. Like, the interest rates move so often. Your job is to find REITs, dividend stocks that can evolve and grow as the economy grows. America as a whole has always been winning. It has its downtimes, but the market is up a lot more than it is down. And on average, you're going to get anywhere between 8 to 10%. And that's just based off of past performance of the entire American stock market. So I challenge people, when you think about using a savings account, I always tell people, why not just own the bank? Buy stock in the bank, because it gets to a point where your dividend on a bank stock is more than what they're giving their customers in the savings account. So we're taking it to a 1% next level. But when I was on Wall Street, when our clients had money sitting in a savings account, it was our job to work with investors to put that money to work. Because when you're sitting there having $100 million doing nothing, you're losing a lot of money. So we got to start adding zeros to our money. So look at that 10,000, like I got 100,000 sitting there doing nothing for me, and I got to put it to work and invest in something over time that can put me in a better position financially.
Which one of your statements, I feel like I invest no matter the cost?
Yes, I invest in myself no matter the cost.
Yes,
yes.
Now let me ask you, just because I'm curious, I got some red in my account.
Okay.
Do I hope that it recovers, or do I just take the L, sell, so I can go buy something that's profitable? Because I've been holding on to some stuff and it don't seem like it's going back up.
Okay, so
I think it's Sundial or
how long have you held it?
I mean, be honest, I have been negligent with this account. Okay. So this has been a couple years of just, what you see is kind of a few years of just not
Okay, so
Swinging
in 2024,
Yeah.
you matter more.
That's what I'm trying to say.
And so does your money.
Yeah, that's what I'm
So
saying.
if you matter more, you got to start doing more.
Yeah,
You can't sit and make money and trust
Why
these
do you think
companies.
I'm in your virtual event? I'm gonna learn all that. Like, I'm serious about this crap. I'm trying to get my money right.
So first thing is, just because it's red, it doesn't mean that it's been red forever. You got to also think, where were we 2 years as a country?
Right.
2 years ago, it was just the other day we were in a pandemic when everything shut down. Then they had to print all this money. The value of inflation, everything went up. So we talking about 2 years. Everybody took a hit.
Yeah.
They're slowly bouncing back. So I have this like motto, like where you only guarantee a loss if you sell.
Right.
So let me ask you a question. For example, you got Sundial. So I don't really know too much about them, but let me ask you, if you bought a property for $50,000 and it dropped to $25,000, are you selling it?
No.
Why not? You lost money. It's red.
Yeah, but it's like, I feel like I know that's going to come back at some point, I would think anyway.
You would hope.
I would hope.
Right.
Yeah.
So you got to look at your stocks that way because it's like you're investing in a business. So if you invested in Amplify and we had a down 2 years, you getting rid of our stock?
I look at stocks a little different than I look at real estate.
You can, but again, let's take real estate out the picture. I invest in your company.
Yeah.
You're down 2 years.
Yeah.
Am I selling your stock?
Depends how you feel.
Right, but
I hope not though.
Right.
Because we're gonna get it back.
Right, but now you got to tell me how you're getting it back. Publicly traded companies got to tell you if they have 2 down quarters or 2 years or whatever.
Is that their annual shareholders meeting?
Listen, yes, but they have quarterly earnings calls that you could hop on and they'll tell you how they're doing, where they're going, why they took a hit, how they're making adjustments, and it's on you to believe in that company and where it's going. It's also dependent on the industry too. Yeah. So some of the companies, I don't know all the companies in here, but I'll give you another example. But Amazon.
None of my stuff is red. That is the real. I got Nvidia, Microsoft.
Well, Nvidia's been killing it. Period.
Google.
But
like I got those. Those are like the number one, the big people.
Right. So, but you don't have all big people here. But again, so even if you take Nvidia, like it's still business, right? Again, like the Apple, Microsofts, and Google's. I mean, in my personal opinion.
What did my Nvidia grow? Does it get so?
Let's see.
I need to learn how to read all of this stuff.
Okay, I can teach you that too. Yeah. So Nvidia has gone up. You bought it at 37.
$37 a share?
No, 30. You put your cost base is 37,000.
Okay.
And you made 81,000.
I made 81,000.
Yeah. Let me see if I can make it into percent. So Nvidia has grown. Look, Nvidia is up 215%. You must have got in early. Which is
so
good.
I am boarded for 37. I bought 37,000
worth.
Right.
Yeah, and you made 81,000. Correct.
Like how that sounds.
But Nvidia is new, hot, it's sexy. What happens? You know, Nvidia might take it. It's just they're a growth stock. They're figuring it out.
But do I keep it? Do I take profit?
So that's up to you.
Like where I'm currently at in my journey is I've been.
So here's how I think.
Money guy for a long, like
okay.
but now I want.
Here's how I think. So this is how I think, right? Yeah. So I had an Nvidia equivalent with Tesla, right? If you have a plan to get to $5,000 a month, $60,000 a year in dividends, sometimes I sell my big gains. So we talk about a 215% gain.
Yeah. I
sell my gains. I don't sell all the stock. I don't sell all the shares, and I buy more dividend paying investments that can give me that consistent, reliable cash flow. Okay. So the questions you're asking and the thoughts you have are valid, but you gotta develop a stronger identity. How long did you plan on Nvidia? Because Nvidia could give you a 2,000%.
You know what's so crazy? I heard maybe Trapper or Ian talk about buying Nvidia. I didn't even know I own Nvidia. Right. Like I'm at the Market Mondays, Nvidia, I'm writing it down. Now you tell me I own. I didn't even.
Yeah, but you got it. I don't know what price point you got it in, but on average, you own a couple hundred shares. You made a killing.
Do I got anything else that I'm crushing it with?
Let's see. Your Amazon's up 24%. Okay. Apple's up almost 10%. AMD, Advanced Micro Device, that's up 67%. But these are you buying those properties that have gained tremendously. You got to decide, do I want to capture the gain or do I want to hold on and rock out? And that's up to you. But the way I also challenge you, we talk about buying REITs and dividend stocks. I would just open a separate account with Charles Schwab and keep
Walk me through that. I want to open up a separate account for my kids. Like, walk me through that. Wait.
So I would slow you down.
All right, because I'm fast. Success loves speed.
Okay, wait. First is you take your risk, which is evident in your account, and that's okay. But now that you own NVIDIA, now you see you made over 215%, you got to watch NVIDIA.
Right.
The people you're talking about showing you about investing, they're watching the market.
Yeah.
You can't invest and not pay attention to where your money is.
100%.
So because at any moment, something can happen to NVIDIA and your gains can drop.
I think I did that with an option. So somebody told me to buy it as an option. I don't even think I exercised it. I'm like, I think I lost.
But, and again, you got to form an identity. So I'll tell you about me. I don't trade. I don't have the time. I don't have the emotional stability. I don't want to.
Right.
But I do invest and I buy and hold. I also like passive income. Now, are you going to get 215% on a REIT? Probably not. But will you get reliable, consistent passive income? Those of you who like the ups and downs, buy the growth stocks. Start trading. Those of you, some people are older.
Yeah.
I like to wake up and know that I got that check coming in. That's why people that get older have consistent income. They buy bonds, they buy dividend stocks. So you got it. It sounds like you want both. Yeah, I want income and I like the rush. I want to go. But again, it's not okay if you don't know what you're buying.
And I want my kids to be like your niece. Like, how do I do that?
So my niece, I do. So my niece, in my mind, and NVIDIA, my niece is holding it.
Got it.
NVIDIA is changing the game. My niece is holding it. Yeah. How many years can NVIDIA get to a space where she can get a 2,000% return like I did on Tesla? I bought Tesla in 2012, but I sold some shares, bought me some more REITs. So it's okay to capture your gains if you made some money. It's okay to hold it, but you take it risk. I'll give you an example. When Amazon stock split, it dropped. Amazon got as low as like $86. Now it's up over 50, 60, 70%. And literally in a matter of year, 2 years.
How much am I up on my Amazon?
25, almost 25%.
Okay.
So you have your risk-taking investments. These are your growth stocks. They're going to go up and down. And you're not going to get that crazy gain with a boring dividend stock. It ain't happening. Yeah. But you got to choose. Do I want the income? Do I want the growth? Yeah. It sounds like you want both, and that's okay.
Got it.
Separate the money. Keep the boring money, the consistent dividends, that 4 to 17%. You know that check is going to come. That's their job. REITs have to pay you passive income. Keep that money aside and start to build both accounts. You say you want to get what can we do to get to $1 million portfolio just with REITs?
Yeah.
What can we do to get to a $5 million portfolio just with my growth stocks? And so I challenge you, every month money should be going in this account, and every month you should be going shopping.
What's a percentage that you say of someone's income that you?
I personally think you choose because
based on your situation,
right? Because they'll tell you 10%, which cool. But not everybody can do 10%.
Yeah.
Some people have bills, they have responsibilities, they're not able to do that.
Yeah.
So pick an amount that I know I'm pushing myself, but I'm not forcing myself to feel like I don't have any money.
Okay.
But I know I'm pushing myself. And I challenge you even further. Every 90 days, add more.
Let me ask you this question. So I got 4 kids. I got 1-year-old, 2-year-old, 3-year-old, 18-year-old. Right now, do we open up an account for them? Right. Walk me through that. Like, what do I need to do? Open up an account for them. I want to open up an account for them, and I want to make a decision on, do I do the same thing with them monthly? Hey, invest a certain amount every month per child.
Correct.
Like, walk me through that.
So when you open an account for a kid, you want to open a custodial account. And that's essentially this exact account you have, except you're in charge.
Do I call them or I go online?
You can do it online. You can do it online. You're in charge, but it's in their name. When they turn 18, it's theirs, right? But you make the decisions. I challenge you, if all your kids that get over 8 or 9, based off of how we've taught kids, they can start to understand and do it with you. So don't do it by yourself. Do it with your children, right? Now, when you open the account, kids have a longer time.
Is there an open button on there or somewhere like that? Or it ain't that simple?
It's not that simple, but it is possible. But when you open an account for your kids, you need all their socials. You need your social, their social. But it's not a hard process. And
I got to get it done immediately.
It'll look just like your account, and you'll see on the drop down, you can go to see all their accounts. So what I do personally with my niece is I invest what I have every single month. When it comes to my dividend investments, I believe you have your starting 5. I got a key good 5 REITs. I think it's really like a good 5 to 10 that exist. I mean, there's hundreds of REITs.
Yeah, let me hear their starting 5.
But so I like Simon Property Group.
Yeah, I'm writing these down.
Which is the #1 mall operator in America. I like G&L, Global Net Lease, and that's a smaller REIT, They're figuring out because they just merged with another company, but they're paying about.
And it's not financial advice, y'all. She's just telling me. She's just sharing this with me. This for mine.
But I've owned that REIT for years. I've met the former CEO. He came and talked to members that have graduated our investment programs.
Yeah.
But I like that dividend. You can't beat that 15, 16%. So
powerful.
Now the price has dropped. But the way I think, if the whole neighborhood price dropped, I'm buying all the properties.
Yeah.
As long as I could keep that tenant in there, as long as that dividend is still coming, I'm happy.
Yep.
If it's paying more than my savings account, I'm even more happy. I own Realty Income. That REIT is one of the biggest and best REITs.
What's it called?
Realty Income.
Realty
Ticker symbol
Income.
O. They own ticker symbol O, just a letter O.
Oh, okay. Bet.
And they just recently bought the Bellagio Hotel in Las Vegas.
What's Simon's ticker symbol?
Ticker SPG.
All right, bet.
I
ain't fooling around with this crap.
Now we're gonna do another episode to make sure Neo got his account open.
I promise you're gonna see these.
But I like GNL. Smaller REIT, not as big as a Prologis or Realty Income, but it's cheap. It's less than $10. They're giving
That's
out.
GNL, you said?
Yeah.
Okay, so I got Simon, I got GNL, I got Realty.
I own Boston Properties. They're the #1 real estate developer for workplaces, so office buildings. Like we just were in San Francisco, the big Salesforce Tower is owned by Boston Properties. What else do I have? I'm eyeing EPR, which owns a lot of experiential REITs. So like Top Golf, Six Flags, they pay monthly too. I like Beachy, the one that we mentioned about Vegas hotels.
Let me ask you this, I want to, cause I was wondering, I'm like, how is Top Golf affording 2, 3 of these in every city in America? Because the people is funding it, right?
Well, so Top Golf is the company. So I don't know how Top Golf is running the business,
the real estate
the real estate, they're paying the REIT. In my mind, EPR just collects a check. They handle all the legwork, and I get paid every single month. But Top Golf is not their only tenant. They got Six Flags, they got ski resorts, they own a bunch of different types of properties. So the biggest thing is to know who their tenants are, that their tenants are strong, how many properties do they own, what percent of their leases are leased, because what good is an apartment building that you own if half of the building is leased?
Okay.
So I look for things like that. I like to make sure that they have enough cash to cover their debt obligations. I always look at their dividend history. Like when you mention any investment that pays a dividend, I'm looking at the yield, which you can find at the bottom of the chart. I like that 4 to 17% window. And then I look at their dividend history. I like to know that every year, every quarter or every month, you're paying your dividend. And every year you have made an effort to give me extra money. So companies like a Realty Income, they've been paying dividends every month for over 25 years.
Every month.
And every year they've increased their dividend. So imagine you buy a REIT one time, you buy a share one time, you've held it for 25 years. They pay you every single month, never miss a payment, and every year they give you more.
Wow.
Like just the thought of that, someone who's older can depend on that. Like that's somebody's livelihood. So when you think about your kids, it's like knowing my REITs are taking care of my kids' expenses. Because I made the commitment to start, to build over time, and to know that this company, that's their job to pay me. Companies that pay dividends, that's their reputation on the line. If they lower that dividend, change that dividend, or it drops, or they cut it, that's a red flag, right? So, and again, because it's coming from their profits, which impacts your investment. But at the same time, if a company can't pay you a dividend, that says something about the profits that they have with their business. So now we got to look at your business.
Wow. Let me ask you this. And man, we're about to wrap this episode. It's power, because I need to go do all of these things so I could come back and like, I did all of this. I want people like, hey, your kid's birthday coming up, like my daughter's birthday coming up. We don't need any. Can somebody give me, how can I get the money? Can they just load my account up, my daughter account up, give a number and, hey, what you want for birthday? Buy her
the easiest way is to, I think, for a person giving a gift, get crystal clear on what you want, what REIT you want your child to have. And say, this is how many shares, this is how much it costs per share. However many shares you can get her, let's do it. And whatever checking account is connected to your daughter's account, that money gets sent to you, you transfer it to their brokerage account, and you can just buy it there.
So they give me the money, and then
that's the easiest way to be able to do it.
I'm like, that's what people should be doing. Like, yo, what you want for buy her?
And then I think you go tell social media, this is what somebody did for my daughter, because
100%.
Again, I think it's about how we're positioning it. It's about, because we have to get out of our mind, you have to have millions of dollars to start.
100%.
Like REITs were created in the 60s so that the everyday person could build passive income and utilizing real estate, but don't have to use debt, don't have to borrow money, don't need a credit score, don't have to do the work. You could be at your job while Realty Income pays you every month, but they're handling the Bellagio Hotel, they're handling the Walgreens, the Dollar General, and some people want to be the landlord, and that's okay. It's so many ways to build wealth. My job is just to show the 99% that you cannot talk me out of your greatness. We could go toe to toe, and there's always an investment that you can utilize. And the way I see it is you're going to walk into a Simon Mall anyway. You're going to walk into these stores. These companies exist.
Where you go.
Right, but because of your mere existence. All I'm saying is if you're willing to give them the time, the energy, and the effort, and your money, why not get a piece of the pie? And the way I see it, I don't care how many shares I got to own. If I'm getting $10 a month for doing nothing, if I find $10 on the ground, I'm picking it up. So you can't treat it like it's a small amount, and you can't get discouraged because you have to invest more. But again, you either can say, I'm gonna buy this property and I'm gonna borrow money, but I can't do it. Or you're gonna say, I'm gonna do this and I'm gonna $10 my way to $1 million so I can get my $5,000 a month and live the life that I want. But I always tell people, if you could work all these years, why not let these companies work for you all these years too? I mean, you're gonna spend the money anyway. And it's like we wake up and we think, I'm finally financially frustrated. I don't have enough. And it's like, well, how do we start as a culture? Like,
and step one, everybody open up a brokerage account.
Yes.
And you can fund it.
Whatever you
deposit
want.
your money in and buy the REIT.
Yes.
And if they looking at this episode, I need you guys to go do that today. Then go in the comments or go tell Ashley, I bought my first REIT. I'm about to go buy her starting 5. But just start. So I know you got a virtual event coming up. Let everybody know how they can tap in with you.
So our second 5-day cash flow creation summit. So we're strictly talking about everything we talked about today. Dividend stocks, REITs. How do we start? How do we do it for our kids? How do we start with what we have to have income forever? Because again, that's their job. So mycashflowcreation.com, 5 straight days, strengthening the mind, the money, the bank account, and getting you into a space where you know it's possible. So you can come, you want to start with $100? That's what we're starting at. I just want people to start, get the momentum, the clarity, get your first check. I remember I got my first 20-something cent dividend. All you know is that it's never going to be 20 cents anymore. It's going to get bigger and bigger and bigger every quarter because I'm reinvesting those dividends. So make sure, I don't know if it's on here, we got to look. Turn on your drip.
I need my drip.
Because right now, I think you got a little over 3,000 coming in. Yeah. You don't need the 3,000 to hit your account. Invest that 3,000 and buy more shares, which means your dividends are going to get bigger every single year because you're reinvesting. Now you're going to get to a point where you say, turn the drip off. I want to live off this income. Yeah. And that's when so we'll focus on that. I'll show you how to walk through the transactions, what you need to do, how to understand what to buy. So I'll tell you what I buy, but it's most important. If I'm not here, who's doing this for you and your family? So I want to show you.
We're going to buy Simon as soon as the episode ends.
So during this event, couple hours in the evening, and just in case you can't come to every session, which I recommend, we will send you a replay the next day, but you got to show up. 2024 is the time for us to say, I know where I have been. I know the mistakes I have made. I don't care my credit score. I don't care my bank account balance. Somebody's paying me this year. Yeah, and I deserve to be paid this year.
That's good. Powerful. Hey guys, man, I had to bring her back. I looked at the numbers. I'm like, well, if this is one of the highest episodes, y'all might be listening. So what I'm going to ask y'all to do is go grab your REIT, right? Immediately. But more importantly, go to mycashflowcreation.com right now. Grab your seat. I'm going to be there. My wife going to be there. My big daughter going to be there, y'all. We got to bring our whole family and everybody I know. You need to be a part of this if you truly care about locking in and building wealth. We'll see you in the next show. And Ashley, let them know how they can follow you on social as well.
So on social media, I am _Ashley M. Fox. TikTok, the Ashley M. Fox. You can go to empify.com and get your ticket to the summit, mycashflowcreation.com.